You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out once again with your favorite bi-weekly options program. As the Brits like to say, it is time for the option block. Yep, we're back. Took a little bit of a hiatus there towards the end of last week. Of course, the U.S. holiday here, the Thanksgiving holiday. So we apologize. We broke the market while we were gone, apparently. We take a couple days off here, and the market just craps the bed. And now we're back, and the market's back in rally-ho mode. So maybe correlation, causation, I'll leave it up to you guys to be the judge. Of course, you guys can join us all the ways you guys know and love, including live via the Mixlr every Monday and Thursday, noon Central, 1 p.m. Eastern. And, of course, however you listen, make sure you hit us up, questions, comments, insights, and make sure you guys play along in our polls. They are fun. We get a lot of fun insights, and you guys always have interesting ideas there as well. Those can be found usually at Options on Twitter. So head on over there and make your voices heard, just like these crazy schmoes coming back from a tryptophan-induced coma. Let's see if they're awake yet. Let's check in first. Let's go out to the hinterlands, where we are joined by none other than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, how are things in the snowy hinterlands today, sir?
Gotta love it. Gotta love it. Plenty of turkey leftovers to get me through the week. Exciting times, to say the least.
You guys have about 8 feet of snow out there. Is that the correct number I'm hearing?
Not quite 8 feet, but we definitely got some snow.
Yeah, it's snowy Chicago today. You know, it's funny. I knew when they were predicting there was going to be a very quiet and very low, kind of not at all bad winter, that it was going to be exactly the opposite. Because the last few years they've said, of course, it's going to be the worst winter ever, and it was fantastic. It was, 70 degrees in February, and we were wearing T-shirts, and it was great. And this year, once they said the opposite, I said, okay, we're in for it. And so far, at least, we're getting more snow in the first couple of weeks here. Not even really officially winter yet than we did like all of last year. So we shall see. Hopefully, it's just a mild blip on the radar before we're ahead to Chicago. It's the new Miami of the North in global warming. So we shall see. And speaking of Miami of the North, this place is not that. It's the opposite. We're going to the land of Maine, where we are joined by a good old Rock Lobster. Mr. Rock Lobster, I hear you're back from your southern sojourn. How was it, sir?
It was quite nice, actually. Quite nice. Hung out in North Carolina for a week. It it was quite enjoyable. That's all I'm going to say. Nice family gathering and all that kind of stuff. So, and it was warmer than it was here.
Yeah, it tends to do that. Did you drive to North Carolina, or is that what I heard?
I did drive.
You are a crazy person.
It's
you have what, like 17 kids, and you're driving? You're nuts.
Well, we have 3 kids, but yeah, it was a drive. We'll just say it was a drive.
Yeah, so
but it wasn't that bad.
Before anyone else in our audience gets any crazy ideas to drive long distances with their children, let's keep on driving right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the old Trading Block, the portion of the show where we break down what the heck is going on in the markets, what the heck is trading. And like I said earlier, we're back. And the markets are back today, at least for the bulls, all the bears out there taking a little bit of a break today. We're back from the hiatus, and, Dow up, nearly 3/4, or a little more than 3/4% actually. S&P up nearly a full percent. NASDAQ saying the heck with both of you. We're up over 1%, almost 1.25%. And the only thing really getting some red on the screen is, of course, our old friend VIX Cash, which is hovering at exactly 20.00. So it was in the teens ever so briefly. Now back at that magical, mythical 20 handle. Also getting gold, a little bit of a sell-off out there, over a little bit more than half a handle, 12.22 in gold land. And WTI back firmly into the 50s, right around 51 and change. So crude getting a little bit of a lift out there today as well. If you like that kind of stuff, stay tuned for Twifo later this week, where we get into that in all sorts of territory. But first, let me go back to my cohorts here and see what's on their collective radars. Let's go in order again. Uncle Mike, we'll start with you, sir. Gold selling off, oil rallying, your beloved. Let's see, how is your beloved Apple doing today as well? Let's grab that one. Apple off a handle, so it's not still not feeling the love. So I guess no one's buying an iPhone anymore. Maybe you haven't heard.
I guess not. Everyone finally went to Android, I guess. No, I think that Apple's actually a very key thing to watch in this marketplace, because it's come down, I believe, like around 60 points since early October when it peaked, and just over the last, it just hasn't been going up at all. It just keeps going down. I do think that that could be something to where at some stage I believe people are going to buy Apple. We still hold it. We still believe in the company as a long-term holding. As I've said before on this show a million times, it's not what it once was, from when pretty much all I talked about on this show was Apple, but in my opinion. But with that, I think that when people start buying Apple, I do think that others will follow. But for the time being, I think Apple is going to be quite the bellwether of this marketplace. The other story that's going on right now, or the other thing that's lighting up my tape right now, are the financials. XL up about 1%. So financials are definitely another hot thing today, along with the technology sector. With oil rallying, as you had mentioned, Mark, I think it's interesting that we could, let me rephrase that, to add to what is happening with oil, I think what's interesting is that even though it was predicted, as you were saying, how we were going to have such a warm winter, or how we were going to have such a mild winter, and then now all of a sudden we're having crazy snow, maybe people were listening to your contrarian point of view and buying natural gas about a month ago, because natural gas has definitely been coming up because apparently we need it. So lots going on right now in the marketplace, and this is going to be a good show today, as it always is.
As it always is, indeed. Same question for you, Mr. Maroc Lobster. Now that you're back in your safe, cozy environs at the end of civilization, what's catching your eye up there, sir?
Well, as far as the market goes, I'm just looking at, we had a little bit of a rally today, and we're not near the highs, the market highs, and volatility has been sort of drifting back up. The vol futures have been drifting up a little bit more. into sort of the end of the rally as of right now. They're still, I would just say they're weaker. So what we need is, we just need a while. If you're a vol watcher and you're looking, when is this vol going to end? Well, the market has to stop moving. So, every time we had we would have these crazy 1.5% or 2% rallies, and then we would give it all back the next couple days. So I would say is right now things aren't necessarily getting worse market wise. Are there worse things coming? Are there worse things coming as far as China trade? Well, right now I think the sentiment is a trade deal would get us to rally, but no trade deal is what we've got. And the tariffs are chugging away, and that's what we have. And then eventually maybe things will improve there. As far as interest rates, it looks like the Fed is kind of going to stay the course. I think we're the only G7 economy raising rates. There's been a problem with the Italians because they want some ridiculous budget that the EU can't afford to give them, or the ECB can't afford to give them. So I think the only positive is that the Brexit thing seems to be moving to some kind of close. So we've had just a collection of geopolitical issues, and like I say with volatility, you want VIX to go to 20, you need 3 vol events, something that nobody expected from the day before. So I think the market kept trading higher on a breakthrough in China trade, and it didn't happen. So now the whole year's rally is gone, which would make sense. The thing that has changed, I think, from the beginning of the year to now is, we're still on the heavy good, the upslide of corporate earnings. The tax cuts and all that kind of stuff kick in. So companies made, a lot of money this year. Is it the peak earnings? I don't know. But, the market's at the same place as the year started, and the multiples are much lower. So generally, I think it's always better to buy things when they're cheaper. So I think this is a decent buying opportunity for several stocks. I think even Apple is one. And I think we're Tosaw here. He has Apple, where are they going with innovation? And I think medical care is the next. They will be doing something in that space, either information or they set up the payment system. I would not be surprised if, that might have been on Steve Jobs' top secret list of things that Apple can do that, only 5 people in the world have seen. If such a thing even exists. Of course, that's all speculation, but that's the only, if you think about markets, what's going to move the needle for a company like Apple? It's already got $800 billion. They already sell to the government in a big way and a lot of major corporations and consumers. So what's going to make them, let's say double in size? What would it take? Well, if they revolutionized the payment and patient information science to actually make it useful, because they got a pretty good selection of the world already by using iWatches and all kinds of stuff like that. That certainly could happen. I mean, that's a big enough account to move the needle. So I watch that. I watch all the little stuff they do in that space. I'm going to add a little more Apple at this level, I think, because every day I want to do it, it seems to go lower. I think there's a lot of opportunity because the volatility is super high in Apple from a historical reason. So you get entry points. You look at goofy things like, okay, well, how do you want to make money quickly in Apple, or actually money slow in Apple, right? Apple can't hold a rally today. I was looking at the Jan 150 puts. Remember, we used to laugh at some of these crazy put levels every year. Remember, we were laughing at the 80 puts one time, or the 50 puts or 70 puts. The 150 puts are $2 for Jan ordinary expiration. So that would be a little better than 1% all in till Jan expiration. So it might not be a bad place to park money to take Apple at that level if you're interested. Again, anytime you sell a put, in my head, you have to be willing to own the stock. And I'm just looking at it like, wow, okay, that's not a terrible spot at this point. So I think 150 is a lot better than 235. So you're looking at things like that, and I think there are opportunities. And if Apple's going to do something, it will be there. So I don't see anything getting better until something breaks through. You know, the ECB can get their budget issues. That would help. China trade stuff, Trump, makes a deal. That could help. Maybe not raising rates as fast because we really don't need to. That could help as well. So, I mean, you have those things, and those are all items that could help.
Yeah. Speaking of helping, it's interesting talking about our boys, the Fed there. You mentioned they're cutting rates. I do kind of wonder if the recent volatility that's been unleashed by the trade war and everything else that's been going on, if that will give them pause. They set this rate hike calendar much earlier in the year when things were, let's say, far more optimistic from an overall market perspective than they are now. Obviously, the Fed's supposed to be an independent body. They're not supposed to be governed by such things as market volatility and downturns. But they see repeated shocks to the system. Some of that driven by the volatility of their and the just velocity of their rate increases. They're not idiots. They have to give them a little bit of pause. I do kind of wonder. You're right. We are the only G7 nation out there, stepping on the brake right now, whereas opposed to everyone else saying, please, throw us a lifeline. So it is a little bit of an odd scenario. Speaking of odd scenarios, there's some interesting data we're looking at coming in here to the show. I think this is from Bloomberg. They were putting down, obviously today notwithstanding, today is in rally ho mode, but coming into today, going into and then the last week, the sell-off is pretty demonstrable in terms of how it compares to other recent sell-offs. They broke it down comparing big recent sell-offs, 2002. So the big kind of meltdown post, the 2001 dot-com meltdown and 9/11 sell-off. 2002 is when we had, in terms of sell-offs, and it changes in price to earnings ratio as well, which is of course reflective of a sell-off. And this, they measured it in the S&P, and it was down nearly 30%. It was like about 28% or so here in 2002. The second worst year in terms of, again, reductions in PE for the S&P was 2008. Surprise, surprise. With looks like about 18%. This graph is not exactly precise. And hot on its heels so far, at least coming into today's show, is a 2018. Looks like about 17% or so in terms of reductions. Yeah, 17% is how much the price to earnings multiple of the S&P has fallen so far in 2018. So that's the third biggest drop since they've been pretty much taking this data into account. So interesting stuff here for the Bears and for the Bulls out there as well. You had a lot to unpack there as well, Mr. Rock Lobster. Healthcare and Apple. I don't know. That's an interesting area. I mean, people aren't buying iPhones anymore. Clearly, that business is dead. So maybe the health is the way to go. They did, of course, tout a lot of the health benefits of their new Apple Watch on the latest release and using it as effectively as an EKG and things like that. They were quick to put the caveat there. This is not an approved medical device kind of thing. But still, that could be an area. I don't know, Uncle Mike, you're big on the Apple innovation factor, the innovation index, I believe, as you call it. Are you buying that this is Apple's next big area? Is this the new car and or TV in terms of what everyone's saying is gonna move the needle for Apple?
I mean, it could, but I really don't see it as a needle mover because that would change let me rephrase that. I could see it moving Apple to the upside, but once again, the standard that Apple set 10 years ago is that they changed the world twice with the iPhone and the iPad. And with what Andrew's describing, yes, they can change the medical world, but the standard that Apple has is changing the world. And I don't know if that's going to quite be a change the world type of thing.
Yeah, it's certainly, they need to do something at this point. They need to, obviously they have good core businesses, but they're not growing at the ridiculous multiple, which you could argue could have been excessive as well in terms of what people were expecting from them. By the way, people expect Apple to, blow past it every time. And when they don't, especially in their core businesses like the iPhone, people get a little bit spooked. Apple clearly today Not even feeling the love. Speaking of feeling the love, looking here at the most active options, what's dominating the tape out. These are terms of equity options. If you want to talk SPY or VIX, those are different beasts, obviously. But looking at equity options here, most active, Apple dominating the tape right now. It looks like it was 336,000. Coming into the showtime, what is it now? It is 416,000 contracts on the tape, with about 62% of that coming on the call side, followed by GE, 231,000, and then Facebook, 154,000 hitting the tape out there. Then Bank of America, Netflix, AMD, good old Baba, Amazon, well, far low down for Amazon today, and then NVIDIA and Tesla rounding out the top 10 here for most actives here in Showtime. Speaking of Tesla, let's get to it with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. You guys know the drill. We get weird, we get wild, we get funky. We look for some weird paper that's lighting up the screens. Our Eye of Sauron, always scanning, as they say in Monsters, Inc., watching, always watching. So you guys don't have to. You guys can just relax and sit back and have your beverage and enjoy a fun show. Let's kick things off as we want to do on this segment with a little name you may have heard of, begins with a T, starts to make some cars. Makes a lot of headlines more than anything. You could say what Tesla makes in a nutshell. It is PR. That's pretty much their product. Everything else is secondary. And they did some of that this week as well. Talking, I guess there was an interview, I think it was with The Street, where Musk came out and said Tesla was he said single-digit weeks of dying, effectively running out of money, running out of cash, running out of everything to ramp up to the Model 3. Seems like it's been a much more difficult slog than he or anyone has really led on, which of course has the Tesla bears out in force saying, look, we were right the whole time. You guys were poo-pooing us. You were talking crap about us. Musk was talking crap about them infamously many times. But of course they were right, at least in his admissions. Not people are saying he didn't file the right paperwork. Who knows? Maybe the SEC will go after him again. But there's that quote unquote going concern paperwork you have to file when these types of things are rearing their ugly heads. They did not do that. But again, people are always going to be histrionic when it comes to all things Tesla. The stock is certainly not feeling such weight of being near death. Up 16 and a half handles, or about 5% today, hitting 342 out there. In terms of what was lighting it up coming in this morning, it was puts. Not so much our old friends, the Jan 50s, though. It's the DEES 80s. The DEES 80 puts opening for 4 cents today, 5,000 times. That's actually the big trade in one of the big trades, not the biggest trade in Tesla today. DEES 80 puts for 4 cents opening. So there you go. June 90 puts also getting some love for 320. Looks like paper selling those 1,000 times there. Jan par puts getting some love as well. 770 for those bad boys. Those are 2020, by the way, in case you're concerned there. But our old friends, the Jan 50s, are kind of way down on the list. You can see 250 of them going up for 5 cents today. So not huge love there. But the downside is active, just perhaps not where you would expect it. Speaking of names you would expect, you probably wouldn't expect us to be coming out of the gate here talking about, of all things, Analog Devices, Inc. We're going to do it anyway. Ticker symbol ADI. That is the first one here on our Odd Block Love Fest here today. Looks like we got a bit of an opening call sale here. Looks like about nearly 10,000, 9,758 of the Jan 97 half calls coming in for 76 cents, pretty much on the bid. This is opening. There's not much OI really to speak of here. This one up on our old friend, the Philly, where so many prints go up these days here. Looking at where, if you're not familiar with ADI, I know I wasn't that familiar with them coming into this. This one is trading right around 89 and a quarter right now. So these bad boys are decently out of the money, shall we say here. And looking back at the past year or so, this thing has kind of been on a bit of a tear. A year ago, it was trading pretty close to where it is right now, 87 and a half. Then it got up to over 100 back in June. Looks like about 103.5 was the 1-year high coming in that, looks like in that June time frame. Then it's kind of been on a little bit of a down. So I actually got back down to 77 back in October 24th, actually. So it's had a 20 plus handle, excuse me, range here. Kind of settling out in the middle of that range, right around 89 here. And Mr. Rock Lobster, this looks like it has all the hallmarks of the old school. Sell some nice, fairly juicy out of the money calls and take a nice 76 cents. And if you sell the stock at 97.5, you're not too upset about it. Is that your feel as well, sir?
It certainly does have that feel. But I have to be honest, it's not a stock that I regularly follow.
You don't watch ADI every morning when you get up with your coffee. Okay, you're out. You're off the show forever, sir.
So, you're looking at it, you're like, okay, all right, we're gonna sell some options, a little, but this is one of those where are people starting to sell calls against their stock positions again? That's the big question. However, I look at this, I'm like, well, it's an interesting vol sale from the point of view is, okay, so that's kind of your 1%, kick for the month. It's a little, I have to say, it's an odd one, but also I think somebody's taking advantage of the volatility being higher. So they're going to, take their money where they can get it. So right now they're saying, how about right now? Why don't I sell some stuff right now and take the money? Because all this chip volatility is totally off the hook. So that's how I would see that, by the way.
And if you're wondering, listeners, Analog Devices is American multinational semiconductor company headquartered in Norwood, Massachusetts. So there you go. Their founders are Ray Stata and Matthew Lorber. There you go. All the data you could possibly ever want to know about the ADI. So it looks like some overwrites going on up there. We shall see how our friends work out, but it has all the feel of old school, which Mr. Rockluster is correct. That's kind of interesting in and of itself. A, they're not feeling a huge rally back up to those earlier levels in the stock, and B, maybe they're feeling a little more confident in writing some calls here. Let's move on to another name here that we don't really talk about a ton here on the show, which is always fun to have a bunch of newer names here on the show. This is California Resources Corp, ticker symbol KIRK, CRC. Trading today, 24.14, up about 80 cents or about 3.5%. Looks like a pretty decent day here for good old CRC. As the name implies, this is an American petroleum and nat gas exploration and production company based in L.A., of all places. Maybe they run the La Brea tar pits on the side. Who knows? What we saw out here today looks like kind of a bit of the polar opposite of what we just saw. Instead of some call sales, we got some put love here. We got looks like the Jan 15 puts, lighting it up to the tune of 60 cents, 8,409 times. Paper coming in, yeah, that's lifting the offer there precisely. Looks like also opening late print, so maybe take that price with a little bit of a grain of salt, but it still looks like this is an opening buy no matter how you break this bad boy down. CRC, let's see what's in the name, what's been going on here over the past year. The past year, I think a year ago, this thing was, I think the technical term is in the toilet. It was trading about $14, so about 10 handles shy of where it is right now. I had some nice runs back in July, got up to 46.5. Hit over 50, hit 50.34 back in, looks like October. So not too long ago, actually. Probably coinciding with the recent high we saw in crude. And then as a result, ever since then, it's kind of just been in the toilet, going from nearly over $50 down to, like I said, about 23.25 right now. So it hasn't been looking too good. And if our friend here is to be believed, things maybe in the near future aren't going to be looking too good, or at the very least, he certainly probably has some concern about that. This has all the feel of an underlying holder saying, you know what, I got to stop the bleeding somewhere. In this case, I'm drawing the line at 15, or in his case, perhaps $14.40 once you factor in what he paid for the puts. Mr. Rock Lobster, are you feeling that as well, sir? This is the old, this far but no farther. I can bleed no more here in CRC. Is that what you're feeling?
As in, I can't take it anymore. I've had enough.
I can't take no more, Captain.
Captain, the warp drive only has so much. The core, what are the dilithium crystals, right?
Well done, sir.
This is a very. This was kind of a well. Right now, anything that says California Resources, after the fires and everything, you have to be a little suspect. Like, exactly.
Yeah, maybe they got evacuated, and that's why their stock took a.
Yeah, just difficult times. For any California resource, anything. You normally, when you look at something like this, you would think it's a line in the sand put. Like, okay, the stock's down here, but I was just looking at some of the fundamentals on it. It looks like it's a company it had a long losing streak, and now it's kind of making some money. I'm not sure what the deal is, but it looks very much like it could be a protective put. Why they're going to buy the 15 puts that far down is a little bit of a mystery, I have to say. So the vol today is, I would not say for that kind of a put buy, it looks very big, but I mean, it's, 9 handles down. And obviously somebody wants to protect a gain or something like that, but I would call that at minimum, it's a curious put buy.
Yeah, I'm not going to say the horse has left the barn already when you get to 15 at that point, but he's got his butt out the door at the very least. When you get to 15, you're like, really? That's where you're going to kick your hedge in? Not maybe any time between 50 and then instead? That was a bit of an eyebrow raiser for me, which is why we like to talk about it here on the old Odd Block. If you haven't had enough of obscure names that deal with resources, then we got you covered with one more here. We're going to wrap things up with our old friend, everyone's favorite, PA. This is Plains All-American Pipeline. Another one, Rock Lobster just wakes up and he's got his screens ready to go on PA. And, of course, on our old friend here, CRC. And then, indeed, of course, ADI. These are his 3 top names. So this is a good one for him to talk about today. But Plains All-American Pipeline, they do pipelines. Go figure. Ticker symbol PA, P-A-A. Up about to nearly half a buck. 21.65 is where they're trading right now, about 2% on the day. This is the name. Let's see. What do we got going here today? Looks like we got, looks like overwrite business back. Business is good in the overwrite land here today, Mr. Rock Lobster. We got the Jan 24, so just out of the money, a little bit closer to the money than our other friend there in ADI. But we got the Jan 24s coming in. Paper blasting these bad boys out for 32.5 cents. Oh, I haven't heard that number in quite a long time. 5,000 times, pretty much right on the bid, a little bit off of it. Looks like they're harvesting some old premium. This is opening, so not much OI to speak of on this strike as well. Let's go look at the saga that has been PA over the past year. A year ago, they were trading $18.67, so about $3 shy of where they are right now. Had a nice little run, kind of coinciding with our last name, kind of following crude all the way up. They peaked a little earlier, though. They peaked on my birthday, August 22nd. Great day to peak there. 27.5 bucks is where their high was there. And then they kind of just turned right around to the dark side and haven't really looked back ever since, trending back down to 21.68. Looks like another one, Mr. Rock Lobster, where he's deciding, 24 level. I'll do it, and if I don't, I'll get my nice, not quite 3/8, but close to it. Getting us a little bit of premium here to harvest. I don't know. This looks like standard override stuff. Mr. Rock Lobster, you on board with this as well?
I think so. I mean, this is one of those Plains American pipelines. It's a natural gas LP, transfer thingy. So that's a yield play anyway for most people. So we've seen a lot of buy rights in there, and there's some juice now. Oils, as you would say, oil prices are back into the can again after they were $75. Like what? A month ago or something, or 6 weeks ago. So yes, I think somebody's looking for some yield right now. It is feeling like a yield play.
It is feeling yieldy. And since in the spirit of yielding, I will now yield my time to the senator from St. Charles, aka Uncle Mike, for a little bit of the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, you guys know the drill. It is Monday, time for Uncle Mike to hold court on the topic of his choosing, the honorable gentleman from St. Charles. Mr. Uncle Mike, sir, this is a good market. Things are selling off and they're rallying. These are markets where perhaps you have risk on, and perhaps you may indeed be inclined to reverse said risk. If I were so inclined, how would I go about it, sir?
Oh, well, let me tell you. But first off, let's clarify something. You can call me nasty, mean things. You can call me a jerk. You can call me a scoundrel. You can call me all those things, and I'm pretty tolerant. But, Mark, please, don't ever call me senator ever again. I can't handle
that's a bridge too far for you, sir, huh?
I can't handle such a thing. It can't work. So anyway, with that being said, so I want to talk about the risk reversal. So anyway, what is a risk reversal? One thing you can do is if you want to own a stock or want to have exposure to a stock, let's say it's trading at 100, you could sell the 95 put, and with the premium you collected from the 95 put, you could buy the 105 call. Most of the time, it's an even money trade, sometimes a credit, sometimes a debit. But for sake of easy example, let's assume it's an even money trade. And by doing this gives you a little bit of a cushion to the downside, because let's say that you'd be even more than happy to own the stock at 95. You could get it put to you. But if the stock does take off, you feel it's going to take off pretty far. So you're willing to give up that first $5 to collect the upside should it happen, because you want that little bit of a cushion. Now, in a market like this, one thing that I've done in years past, and I'm doing right now actually, is I'm legging into a risk reversal. I actually have a risk reversal from last year going right now. I can't say the specific strikes because I need to keep my compliance people happy, but with what I'm doing, we had a risk reversal on last year, and I still have a long January call on it, no short puts on it. But because of the fact that the market had gone up so much, we had gotten out of the short put to where we now have a cost basis on this long call of roughly 10, 20 cents. It's very minimal. It's pretty close to free. So we still have it till January. Now we're going to need a pretty big market rally to have this happen or to have this work, but we still do have it, and we have it on the books. Now, with that, the other point that I want to make with this is that we often talk about closing out short options. Well, this is another example of when last year or a few months ago on the risk reversal that I had set, and by last year, I guess I mean this year, so 2018, because I'm already in 2019 in my mind, by gosh. But when the markets were higher a couple of months ago, we got out of the short put for a small debit. Now, keep in mind, we got back into it. We got out of it. We did stuff, as Andrew would say, along the way. But the moral to the story is that if you have a short put in place and you've gotten roughly 80% of the potential profit or 80% of the potential credit you can take off the table as current profit, this is another example of how it really worked out well, because as everyone knows, the last couple of months, the markets have gone down. And from our January 2019 risk reversal that we were using, we have no downside exposure for it, except for that a few pennies on the out of the money call. So now with that being said, as the market was coming down, one thing that we did is we sold a short put for next year. We have the money available. Markets come down. Why not start again? The money's available. Let's do this. Now, the benefit of doing that is that you can set up another risk reversal. You have no other money at risk, and you can essentially create what I like to refer to as a double bubble, meaning that if the market goes higher, you can benefit from both years' risk reversals. So with that being said, though, we have not bought the long call as of yet. We sold the short put, and it's losing a little bit right now because it's so far out of the money, and we go out pretty far. We go out 9 to 12 months with these. But we still have not bought the long call yet. So if volatility is not a factor in option pricing, one would say, okay, market's down. Why not buy the long call when the market's down even further, because you'll get a better price? Well, kind of, but here's what I'm looking to do right now. Yes, the market's down, and I am looking to buy the long call for the next year's 2019 long-term risk reversal. However, time decay is on my side right now because all I have is the short put. Not a lot. I mean, we're out almost a whole year with this next year's short put. However, it is still on my side. With that, if the market were to stay sideways or maybe go up just minimally, I'm better off without it. So what I'm looking to get for when I'm going to buy the long call, I want to see a little bit of a drop in volatility. Now, I don't have a specific number, but I am looking to wait a little bit. Number one, if this market continues to stay at these levels, then there's no reason for me to have that long premium on the table. However, should the market go higher, I can't wait that long because I don't want to miss it going up to the upside. So the moral to the story, one, this is real life practice of getting out of short options when you get at least 80% of the credit or around 80% of the credit. And number two, have an understanding of volatility. I'm waiting for vol to drop, and I'm also waiting for a little bit more stability in this market. But one of the main things that I'm waiting for before I actually buy this long call is for vol to come down a little bit. And should the market rally, I believe that vol will come down. But with that, if we get a rally over the course of the next few weeks, I believe that the vol coming down will get me a similar price. What I'm saying is that I don't believe I will be missing much in buying this longer term out of the money call if the market comes up a little bit, because I believe vol is going to come down. So the second moral to the story is have a good understanding of what volatility is and how it can work. And that is the strategy block for the last time, November of 2018.
You love those grandiose time frames. The last time for 2018. But no, it's not the last time we're going to do a mail block. So let's get rolling and see what you guys got on your brains right now.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, you guys know the drill. You know how to play. Hit us up, all the various outlets. If you go to Add Options on Twitter, you also get to play in our polls like a lot of you have. We asked you guys last week. We kind of keeping the crystal ball love alive. It's fun. We had a especially challenging scenario on the last Volatility View show to pick VIX 2 weeks out. So coming up this Friday at 1 p.m. Central, where's it going to be? And a lot of you guys played. A lot of you guys gave in with your very specific suggestions. We need to go through and compile all those and put them in a nice chart so we know exactly who, if anyone did win, who did win when the time comes. In terms of the aggregate poll on Twitter, it looks like a lot of you are in the range I was talking, which is lower. 16 to about 18.5 or so was number one with 36%. 25% saying 18.5 to about 21. 22% saying 21 to 23.5. And 17% going crazy town over 23.5. Again, this Friday. Anything could happen right around a 20 handle out there right now. Let's get a latest quote here on our old friend VIX Cash. Back below the 20 handle, 1971 here in VIX land. All right, so Mr. Rocklops, I think you played along with that. If you have a pick in there. I forgot. Do you remember what it is off the top of your head? I'll have to go dig it up.
I thought I was like 1597. Which seems
something like that. Yeah, you were something like that. Yeah.
Which seems like there's very little chance for that. I mean, that was last week's, right? Or even for this week, I think
very little. I like your short selling your own prediction. I like it.
Yeah, it's just the reality is we're starting to get back to maybe a 16 vol, but it's. Anything could tip the scales the other way. So I would be surprised. I would be actually very pleasantly surprised if it got there.
Yeah, that wouldn't be the worst thing. I think for a lot of people in our audience would like to see a little bit of you like vol, but maybe vol coming in a little bit these days. It wouldn't be the worst thing either. Let's see what else we got here. Khabib wants to know, what do you think is the best use for unusual activity? Is it the best for trading or for an indicator? Well, we do a lot of it here on the show and indeed on the network. There's a lot of different uses. I think it's educational, first and foremost, to say, hey, people who spend a lot of size money on these things, they're not always right. In fact, quite frequently, they are not. So that's a good thing. We always say the size money, not always the smart money. So just to make you feel better about yourself, it's good for that. But we always say, if you're going to use this stuff, and you first off do your due diligence, all those caveat emptor things in there. But I think the best use case for it is we talk about. Let's say today we talked about someone selling upside calls, or a lot of the use case we see is people coming in and buying. Let's say that the typical buying out of the money calls is what we see a lot of as well. In that scenario, people say, oh, should I follow in? Someone bought 10,000 on this name that trades 200 contracts a day. Should I buy the 10,000 in first contract? The answer is almost undoubtedly no, because they've bid up that strike to high heaven. But what you can always do, if you do like the outlook and you share it, is it allows you, it creates distortions that allow you guys to take advantage of them in the trading. So in that case, maybe you buy a vertical instead. So you buy something near at the money, and then you sell that strike that the paper just bid up to high heaven. So there are savvier ways to follow along with this paper and if you do indeed believe the paper is on the right side of the fence. So yeah, even if you do like it as an indicator, and it has a value there as well. All the studies you've seen out there are saying, in terms of predicting crazy movements in stock, unusual options activity is still the best by an order of magnitude, because a lot of it still is where the shady stuff goes on. It's in the option space. So that is there's still a use case for it, but it should always be an indicator first, maybe a flag. You see a lot of paper going up. I probably want to investigate this name a little bit more. What is going up? What are they actually up to? What do I think are they doing? Are they doing something right? Are they wrong? Are they closing? That's a big thing people forget to look for. Are they closing? It's very basic, but if you don't do that math, then it kind of ruins everything else. Where they went up, executing, try to figure out what they're actually doing. Are they buying? Are they selling? What they're up to when they're spreading it, something else. So a lot of analysis you have to do. You hear us do some of it live now on the show, which is kind of fun because we don't see these ahead of time. So it's all kind of on the fly, which is kind of fun. So you see kind of our analysis and what we do, a very cursory kind of quick version of it, but that's kind of a lot of what we do. And then, you can break it down for yourself in terms of the efficacy and what the use is for it. But I think first, as a flag for something that's going on, as an indicator, as you say, here to do more. Then if you do the due diligence and think this person is good, then it's a distortion that you should take advantage of. You shouldn't just immediately jump on and be the 10,000 in the first contract. You want to see what they're bidding up or maybe what they're crushing in terms of the vol skew and then trade accordingly. You don't want to be the guy just piling into the strike they've already hammered or already piled up. You want to go the opposite way and take advantage of it. Sell the strike they're buying, buy the strike they're selling, and hopefully it works out for you. Mr. Rock Lobster, is that your consensus as well, sir?
I do. I think it's just a great way to, I remember a friend of mine who started live vol. He's like, it's a game theory thing. When all of a sudden, when people buy, 10 or 10,000 or 15,000 contracts, it kind of changes things a little bit. So you have to use it. I think one thing we used to do when we had our little, we had our Option Insider, our unusual activity show, is what I did is you see what their trade is, and then you try to replicate it in what I would call like a more retail-friendly fashion, not sort of the swing for the fences fashion that we saw there. Something more retail-friendly. So I think that's certainly something you can do when you have a little more skill and practice. That's something that you can do. But it does change things a little bit, like all those put buyers in Tesla. There was that was a sign when the stock was going crazy that, and you certainly had a chance to get out of them. So it is some kind of a tell, although you don't want to be the last person on the same option, jumping on. You need to think of a little bit more clever of a way to manage that.
Yeah, it has a lot of uses. It's up to you kind of what you feel the best use is for. It's educational, it's informative, it may show you an interesting way to trade something you hadn't thought about before. It's definitely a flag, it's definitely an indicator. It's all of the above. Let's see, a similar question here from Delia. How do you tell when people buy an option? Well, a lot that goes into that. You hear us do some of that live here on the show. To the easiest way, the kind of starting point is you look at the goalpost, right? The bid-ask spread. If they're lifting the offer, unless they have the best broker on the planet, chances are they're probably buying it, and vice versa. If they're hitting the bid, they're probably selling it. Of course, a lot of that gets kind of fuzzy when it gets in the middle. Something like VIX is a good example of that. VIX options, it's all institutional flow, and these guys are excellent at splitting the uprights. Everything goes up mid-market. And also, if it's tied, that's going to mess up because they can give up points on the tie and then not reflect that in the bid-ask. So that could screw things up a little bit too. You have to look if it's tied, but the starting point is going to be the goalpost, the bid-ask spread, and then you start digging into other things like that. Like, for example, sometimes if we're still having a hard time figuring that out, the next level down, the next strata to dig into, of course, is the volatility, what's going on the strike. If, volatility is getting crushed, then you could probably, on the strike at least, you can probably figure they probably sold them. I mean, obviously, the volatility could be getting crushed in that name as well, so you got to kind of filter that out a little bit. But in general, that's a good secondary step to say, okay, they probably didn't buy this if the ball's getting hammered, and if the ball's getting hammered and they're offered kind of in their face here, then they probably didn't come in and buy a bunch of these things. So that there's a lot of things you can go, and you can dig in even further, obviously. But those are kind of the first two most basic layers of that you should probably be doing when you're looking at buying or selling. And then, of course, you can always, if you trade this name a lot, you can look at the OI. That's a big feature, too. When this OI got opened on that strike, so you can tell if it's probably reasonably closing. You can look at what they did before and kind of reasonably intuit if they're piling in or they're closing it out. And that's a good way to look at it as well. So look at the OI, look at where they went up in the bid-ask spread, look at the volatility. And those three things combined should give you a reasonable approximation. Sometimes it's still a crapshoot. Listen to our volatility view show. Half the time we're like, we don't really know, but it'll get, those three things should usually help you filter out the signal from the noise. Let's see, we're getting up against it here really quickly. Let's just see if we got any chatter, folks. Oh, we got our old buddy Mr. Brandt in there. He's still selling his snap puts. It's 6 snaps. It's $6.50 now. It's rallying 27 cents. You've been blasting away at that 7 strike for a while. Hopefully, it's working out for you. Snap has most likely bottom. For your sake, I hope that's true, sir. I know you've been hitting a lot of those puts. 3/7 to 3. I didn't say it was 3/8. I said it was 0.325. I said it's approaching 3/8. And I miss the old days when things were quoted in eighths. Those were fun days, and steenths and eighths. We don't see a lot of that anymore. So when I see 0.325, it makes me nostalgic for 0.375, which is, of course, 3/8. But that's a conversation for another day. We won't get into decimals. So we'll keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block, see what's on our collective tapes that we're watching for the rest of this week. Of course, we got Vol. Will this dance continue? Will it not? We shall see. In terms of earnings, there still are some on the tape tomorrow. We got Salesforce. We got Box after the bell on Wednesday. Let's see. Thursday, we've got TD Ameritrade before the bell. And GameStop, if you're into the game retail. That was the name I think you were watching for a while there, Mr. Rock Lobster. And HP after the bell as well on Thursday. And then if you want more, there's Burlington's, Chico's, all sorts of retail names coming up later on in the week. Express, Abercrombie, and Fitch. So apparently it's clothing retailers later. I'm not sure if that's Thursday or Friday. I can't see here. But one of those 2 days has that there. So a lot of earnings still popping off. If you are indeed so inclined, we do have the earnings move reports on the website if you want to check those out. Mr. Uncle Mike, we'll start with you, sir. What is on your radar for the rest of the week?
Well, we're ahead on the year again in SPY anyway, and so want to see if we can hold that today. I think we're at a really key point in that we're kind of right where we began in the marketplace, so I think that's very important. Going to continue to watch to see how the Christmas shopping season is going beyond just Black Friday. Of course, today is Cyber Monday, so going to be watching to see what the numbers were from that as time goes by, and that is pretty much it, along with the whole China thing and anything macro.
Did you do your American civic duty and go out and fight the hordes on Black Friday, sir?
for the first time I think that I've ever left the house, with the exception of going to duck hunting blinds on the Friday after Thanksgiving, I did go out and get a really good deal on a laptop, thanks to an expert buddy of mine who gave me some guidance.
So you did fight the hordes. Yes, there were some good. I picked up a laptop or two myself this year. So if you do it stealthily and you go out certain places you know are not going to be bad, it's not that big of a deal. If you go out to like try to get a doorbuster at whatever store or like whatever, that's madness. Forget about it. But if you do it the right way, it can be a relatively fun experience. Like the Rock Lobster, I'm sure you have tons of big box retail stores by you that you can go raid on Black Friday, right, sir?
We have none. No, we have a Walmart. there's a
Walmart in your town?
7 miles away.
Oh, okay. So you have one traffic light, but you have a Walmart. So there you go.
No, well, it's in the next town over.
Oh, okay.
Actually, it's not in our town. And although we do have a very cool tool store, Bath Industrial Sales is in West Bath, that has like every kind of tool you can imagine for welding and just name the tool for heavy machinery type stuff, or woodworking, or fixing boats or marinas or anything like. They got lots of tools. So that I wouldn't say it's a big box store, but it is the biggest store in our.
Well, sir, you have to make it up then with your civic duty. You got to do some shopping on Cyber Monday. Then otherwise you're not being a true American, sir.
I think my wife might have done.
Got to contribute to that GDP somehow. We can't all hide in Maine under our pillow.
And just eat oysters all day long? I thought actually that's what people lived in Maine for, so they could do that.
All right, what's coming up on your week, sir?
Our week is December 5th. Oh, the stuff I'm looking for, I'm just, I'm looking for a market to bottom, but at this point, I think they just took all the multiple out of the market. It's amazing how incredibly efficient it is, but you're back to the basically just beginning of the year prices. Multiples are up for stocks, so everybody just look for the big smack. So let's see if it happens. It'll be a good buying opportunity again, like it was in 2016 or 2014 when we had that. Or it was at the beginning of 2016. No, not 2016. What was the Chinese scare? I think that might have been 20. It's hard for me to remember at this point anymore, but I think it was Obama's last year in office. We kind of started the year where they kind of hit the market a little bit. So when will all this change? I don't know. But at some point, there are some stocks that are starting to look like pretty interesting purchases. And, Warren Buffett got rich by buying stocks when nobody else wanted them. So this would be close to one of those times.
It does tend to work. I saw some recent analysis too. I think it was, I forgot where it was, where it said pretty much right before Bear Stearns collapse and the big 07, 08 meltdown really started in earnest. You could make a similar analysis then. The S&P had dropped quite a bit, and it wouldn't be an insane person who wanted to get back into the market at those levels, and then they were pretty much took them about a decade to that level to come back.
To get back.
So be careful when people are diving in. But yeah, you're right. It is better buying now, right, than it was Apple at 150 or 170. Certainly better than, what was it, 230? What was the high up there? Something along those lines?
237.
Yeah, so certainly better. That's inarguable that it is better to buy at 150 to 170 than it is at 230. Good stuff. That music means, of course, we have come to the end of this epic journey. We're back this week. Hope you guys enjoyed the best ofs last week. And, of course, a lot of good audio hitting the network all last week. And, again, this week we'll have more interviews and fun stuff coming to you, so stay tuned for that. But before we go, I'm going to go back around the horn. Let me start with ye old Uncle Mike, owner of a fine new laptop. Sir, Mr. Uncle Mike, what's coming up in the land of St. Charles, sir?
All sorts of things. We will have one more in-office meeting by the end of the year. We still have yet to set a date, but keep posted for that. And if you are looking for somebody who can help you with your finances, who is not afraid of a volatility drop or time decay doing its thing and actually understanding what the heck it is, give me a call at 312-212-3531 or visit my website at stcharleswealth.com.
You should record these in-office meetings. You could broadcast them. They call them the Uncle Mike sessions. What do you think?
You got to be there. It's a special thing for this one.
Special in person only. All our listeners don't get the love then. They got to be in St. Charles. What if they're in sunny San Diego enjoying the sun? They got to come up. I guess they can get a nice Skippy's Euro.
Why would they want to be there when they can be in St. Charles?
That is true. You have defeated me with superior logic, sir. I concede to you. All right, Mr. Rock Lobster, sort of same question for you. What is cooking in the land of the pit?
What's cooking in the land of the pit? We have a manager positions by Greek analysis December 14th or 15th. It is the Saturday the 15th. That is a Saturday class. Learn, understand what those options do before you go jumping into the swimming pool into the deep end with no flippers on your feet. So a good way to do that. And that's our next thing. Also, today is our last day, Black Friday. Everything in our store is 50% off. So if you want to learn stuff about options,
big deal.
Now's the time. Yep.
Big savings. Check it out. OptionPit.com.
It's been a huge seller actually. It's
wow.
Pretty great.
Half off all the webinars, all that stuff.
Yep.
Wow. If you've been listening all year and you've been waiting to pull the trigger, head on over to OptionPit.com.
Now's the time.
Now is the time. Get it out there. Get going. Pull that trigger. Get some webinars. Get some good stuff. If you haven't had enough of the Rock Lobster, then you'll get your fill there. I guarantee you. So check it out. OptionPit. Half off. You can't look askance at that. OptionPit.com to learn more. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank you all for joining us. We love you. You're downloading, you're streaming, you're voting in our polls, you're asking questions, you're commenting, all the good stuff you guys do. Keep it coming. And we'll keep coming back at you with more content here on the network very soon.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.